Hey there, everyone. It is once again Jay Cottrell with eXp Realty and Josh Pruitt now with Movement Mortgage. And we are going to do a 2023 year in review, and then also kind of give you, I don't know if our predictions, but some of the expert predictions for
Yeah,
what might happen in 2024. And probably not going to spend a whole lot of time on the predictions because if anything has shown true, nobody knows what's in this kind
right.
of crazy market world we live in, what's going to happen. So we'll kind of look at those, but we'll take them with a grain of salt. And Josh, anything you want to say before we kind of just go ahead and get into it?
Nope. You hit it right on the head.
All right, great. Well, you get to start out anyway. So our agenda is
Also,
going to, yeah, our agenda is we're going to do a quick recap of 2023 on the mortgage market, the national real estate market. Maybe not so much the national real estate market because when I started putting those slides in, it just started getting really long. But definitely we're going to hit the local real estate market. We're going to look at our 2024 predictions for the mortgage market and the local real estate market. So, what do you say to save all our viewers some time and just go ahead and get into it?
sounds good.
All right. So 2023, I kind of named it the reset year.
hmm
I feel like there were a lot of things that just had to reset from the previous few years, the post pandemic, where everything got crazy and went into a absolute frenzy.
100%.
All right, so let's take the mortgage market review. So Josh, this one's all you.
All right. So we won't hang out here too long as far as on the mortgage market review for 2023. But as you can see on the graph there, 2023 really was the big hit where rates began to really start to increase. And, was a lot of the reasons behind um, when we look at the housing market in 2023, so did we see a decline in purchase power and purchasing and all the things? Yes, we did, which contributed a lot of that to the rates, which those that don't know, a lot of the rates play a factor or are a factor based off of the economy and what's going on. So inflation is huge. Unemployment is huge as well. Those are kind of the big factors that play on this CPI when it comes to the rates and stuff and what's going on in the market. So, but as you can see, rates went up to about 7, over 7. Some were even looking at 8s. But then towards the end of the year, they started to come back down, which was a positive because this was a year that we all said that rates should start to come down. And in fact, they did the opposite. They went up. So, um, but that's pretty much 2023 in a nutshell. Is we thought rates were coming down, they went up. So made it harder for buyers to purchase and stuff. So, but regardless of that, we still saw a lot of people still purchasing because they either had no choice or because they were planning to, regardless of what the rates were doing. So you can see here on this graph, this is a trend of how high rates have been, how low we've had them. But as you can see, even though we topped out at 7%, we didn't see anything over that or similar to that really. Looking at 2005, 2008, whenever we had what happened in 2008, right? So, it's not anything out of the normal. We think normal is the 2% rates that you saw, a few years ago. That's not normal. Normal is the graph that you see here. Basically, 5% and above is normal. So the only reason we had lower rates is because looking at 2010 there and beyond, that was after everything that happened in 2008. So that's the only reason that we had rates drop the way they did over the past years or the past decade, so to speak. But normal is 5% and above, to be honest. And then you see the ranges there anywhere from 7% to almost 18%. I think 18% was the max, 18, 19%. That's the highest it's
Yes,
ever been. So now, obviously, nobody can afford a home at 18% and the prices that are out there today.
not at the
Um,
current prices.
yeah, yeah. So 2023, we saw things go up, right? Um, and we're starting to see things come down. That's kind of the trend that we're going into in 2024. So, And as you can see here, top 3 reasons buyers pause their decisions, mainly because of mortgage rates. And then, of course, second, obviously, is inventory. And then third is affordability and home prices. One of the things you're going to see there between affordability and home prices and mortgage rates is those two combined knock some people out of being able to purchase because of their debt to income and affordability. So mortgage rates going up is a big factor, but the home prices we have now kind of affects that affordability for a lot of people. So rates going down is a very good positive for a lot of people.
Yep. Which leads into what did our local real estate market look like in 2023? So we talked about before sort of a return to normalcy in the local market. And you'll see a lot of that on a lot of these comparisons, but then others you'll see where it sort of departed. If you look at the number of active listings or the number of homes for sale during any given month, that was trending kind of back to not normal, but the normal we've seen for the last few years. So as you can see, 2019, we were at close to around 3,000 homes on the market. If you look at the red line, what would be considered a balanced market currently, while that number has come down because sales have slowed, it's still close to around 4,000 homes on the market, which is over double where we're currently sitting. So December, we ended up with more homes on the market than we did in the past 3 years. But again, it's still well below the previous, prior to the pandemic, like a 2019 inventory level. And again, well below where we would want to see a balanced market, where basically every buyer that's looking for a home can find a home, and neither one has the advantage. There's enough inventory out there for sales, but there's not an over amount of inventory where sellers are having to come down off of high prices, and there's not as much of a shortage of inventory as we saw in previous years. Look at the number of sold listings. So the home sales have kind of returned back to what I would call normal in our market. You can see they were well above what we normally see in our market for the years, basically 2020 through last year. Last year it started returning back more towards a normal level at the end of the year. This year they were below 2019. But again, 2019 was a pretty healthy market for our area as well. So with it dipping below that, it kind of, again, just returned back to sort of normal levels.
Mm-hmm.
But if you look at the number of pending contracts, this is one of the things that started to move away from other things. So you can see that they started picking up a little bit higher than the previous year in November and December. So 2022, things started tanking down towards the end of the year. And 2023, which was last year, we started to see them starting to trend, still moving downward, but not as much. And basically that was a thing of rates. So we saw rates decreasing towards the end of the year, which meant homes going under contract started picking up in line with those rates coming down. And I think we're going to see, probably if the rates stay where they're at or even decrease a little bit more, we'll see probably Q1 of this year pick up better than last year.
Mm-hmm.
The number of new listings hitting the market really hasn't departed much from a lot of other things. So even though we had some craziness over the last few years as far as home sales and home prices, if you look at the pace of homes coming on the market, that never really changed, except for in 2020, obviously, when the 14 days to stop whatever that phrase was. I don't even remember what it was now, because we definitely didn't do it that long. We did it longer. You saw that April hit where nobody was putting homes on the market because nobody knew what was happening. But then it really quickly came back up to a normal pace. A little bit slower pace this year, but if you look at those lines, I mean, none of them are very far apart.
Mm-hmm.
As far as the average sales price, we ended up the year 15% higher December than 2022. And you can see that's still a pretty healthy margin since 2019. Home prices are up almost 69% since 2019. So we have seen a lot of healthy appreciation over the last 4 years, 5 years, and still a healthy amount of appreciation since last year. Why is that? Because people are moving to our area. So when you look at the national trends, the numbers don't look quite this high because you have in the mix there the numbers from places people are moving out of mixed with places like ours where people are moving into. So we tend to run higher than what the national average is on home price appreciation and lower on inventory levels, simply just because of the amount of people that have moved into our area over the last few years. That's still happening, not at the large pace that it was during the pandemic and the post pandemic year, but that's going to keep our home prices probably moving at a little higher pace than the national averages, simply because of that factor. And so that's pretty much what I expect, and we'll get into that later. If we look at median price appreciation, you can see every month this year it was higher than the month in 2022. December was the median moved up almost 14% from the previous December. So we're finishing out the year with a very healthy home market. And like I said at the beginning of last year, don't expect to see price declines in our area. We might see smaller home price appreciations, but don't expect to see any type of home price depreciation. We simply don't have the inventory to make that happen. So that's 2023. As you can see, there was sort of a return to normalcy, but in other areas, we are continuing to see like home price appreciation. We're starting to see sales pick back up. So a couple things that are a little bit different. Any other final thoughts on 2023, Josh?
No, I think I think that pretty much sums it up. I think the good news for our area is that regardless of what's going on nationally, we will continue to see growth more than everybody else. So
Yeah.
my advice is 2023, 2024, moving forward, don't pay attention to the national statistics. Look at your local market. Look at your local experts, or, I mean, we're not really experts, but we know what's going on in the area. So
we try to keep our finger on the pulse of things.
Yeah. So pay attention to what's going on, with what we share, because it's a lot different than what you see in national statistics. So
yes. All right. So moving back into 2024 mortgage. So back to you, Josh.
Yes. So when was this captured as far as the rates here on this?
This morning.
This morning. Awesome.
Yep.
Awesome, because I captured one as well. I want to make sure it wasn't the same, or it was the same. So, so as you can see, you see that 30-year fix at a 6.69, 15-year fix at a 5.95, 30-year FHAs at 6%. So those are all good numbers, guys. We're not at a 7. We're below 7. What you're going to see moving forward in 2024 is a fluctuation between staying, I believe, below 7, 6.7 there, and lower. Hopefully ending the year at right around a 6%, 6.25. Those are all positive things, right? So remaining flat and dropping down below are positive things. So, in our area, we get a lot of government loans that we do between VA, FHA, USDA. Your rates are going to see right around a 6 and in the 5s is what I see happening. So a lot of positive things that are going on. So compared to at the end of last year, third quarter, fourth quarter, we were looking at 7.25, 7.5. People having to buy down the rate a lot to get somewhere comfortable in the 6s. Good news is we're not there. And I don't see us getting back up to that this year. I see the downward trend. I believe the Fed's done with all the rates hikes and stuff. And I see us trending downward, which is a positive.
Mm-hmm. The one thing that I didn't notice before on these Mortgage News Daily graphs is if you look below the rate, you'll see it has this spread of 5.99% to 8.03%.
Mm-hmm.
That's kind of the spread of rates. So,
Yep.
Josh, you can correct me on this, but basically, like if we were just talking in generalities, 5.99% would be for a highly qualified individual. It's got great credit history, probably a low debt to income ratio, and the 8% would be an individual that's probably not as good as that.
Not necessarily. So
Yeah.
actually, your bottom is the rate that's reflected for the national rate.
Okay.
So your 6.69 is your national rate. Majority of people are not going to get that rate. And the
Mm-hmm.
reason being is because this is the national rate that they say things are at. So like when you work with mortgage lenders, there's more to it than just getting in at the flat rate. So yes, people with great credit are going to land at that, and we can also buy it down just a little bit. It's not, we're talking flat, so you're not paying
Mm-hmm.
very much, if anything at all, for that rate. Now, worse credit, your 8 is pretty high up there. Your bad credit, you're looking at probably a 7 to a 7.25, maybe 7.5. So not going to see 8 up there.
Okay.
I think it's just a sliding scale of where the rate is at, but you also see the monthly payment down below.
Yes.
So Mortgage News Daily allows you to plug in numbers and see kind of where you would be at with the rate, what your monthly payment would be, and if it were to be at a 5.99 versus like the 8.03. But the national rate is basically what the rates are today. Majority of people are not going to get that rate.
Got it.
So, yeah.
And just for reference, that monthly payment that's on the bottom there, if you look at the bottom of the graph, that's for a $250,000 loan, not a $250,000 home purchase, but a
Right.
$250,000 loan, because that would be our most of the
Yep.
homes right now people are buying are right around 300,000. So you
Yep.
put 20% down, that drops the mortgage amount to 250, and that's what people are paying for mortgages nowadays.
Yep.
So that might
And
be a
that
shock to some people.
does not include taxes and insurance.
Nope, that's just the base payment. Yeah.
Yep.
Yep. Principal and interest only.
Yes.
So I'll let you keep going.
Yeah, so we won't hang out very long on this, guys. What I wanted to show you is the volatility of projections and predicting what this year is going to hold. And so I put all these in here just so you can see how each of the experts are predicting this year and how you really can't predict what the market's going to do. So you see down at the bottom, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much to be humble about. So going into 2024, most economists agree the rates should decline somewhat at the start of the year and pull back gradually during each quarter. Some predict the rates will stay above 6.5 throughout 2024. Others expect rates will decline to 6% by year end. So next slide. So if we look at, for example, we look at Fannie Mae. Fannie Mae is one of the major home loan government entities. You have Fannie Mae, you have Freddie Mac. When we send in your information to go through automated underwriting, it goes to Fannie Mae and Freddie Mac. And based off their guidelines for each loan, they say yes or no, right? So
Mm-hmm.
Fannie Mae says rates will decline to 6.5%, right? Based off the December housing forecast, right? So during the first quarter of 2024, falling to 6.5% by year end, right? This reflects a major downward revision in Fannie's forecast. Just a month ago, the mortgage giant didn't expect rates to dip below 7% until the second quarter of 2025. All told, Fannie Mae predicts mortgage rates will average 6.7% in 2024 and 6.2% in 2025, right? So next slide. We have National Association of Realtors will decline to 6.3%. Okay. Based off the quarterly U.S. economic forecast, the trade association predicts that rates will continue to fall to 6.3% by the end of the year. Now, Lawrence Yun, chief economist of the NAR, said during a November real estate summit that he thinks rates will be between 6 and 7% in spring of 2024. I believe we've already reached the peak in terms of interest rates. The question is, when are rates going to come down? And so far, we're projecting, if you look at projections right now, we're looking at between 6 and 7% right now. Realtor.com rates will decline to 6.5% based off the 2024 housing market forecasts. Rates will average 6.8% this year, dipping to 6.5% at the end of 2024. You can go and go to the next one. The last one is the MBA. Rates will decline to 6.1%. In its December mortgage finance forecast, the Mortgage Bankers Association, MBA, predicts that mortgage rates will fall from 7% in the first quarter to 6.1% by the fourth quarter. Industry group expects rates will fall below the 6% threshold in the first quarter of 2025. The November data on employment, inflation, and the December FOMC meeting all moved markets to sharply reduce interest rates, a clear positive for the pending spring home buying market, MBA chief economist Mike Frantantoni says in 2024 Outlook. So I wanted to show all this, guys, because you can see that all the experts have different opinions, different forecasts. But what's one thing we can hold on together, and that is that inflation is starting to come down a little bit. Unemployment rates hopefully continue to start to come down, and the Feds are done hiking the rates at the moment. So what we can see is that the rates are coming down little by little. That should remain the same throughout the rest of the year. What I would plan for is hanging out at around 6.7, fluctuating down to 6.5, and hanging out there and maybe coming down little by little as the year goes on. But if anything, it will remain flat and hopefully coming down as we continue to move forward. So that's the best advice I can give.
Yeah, I think a lot of it's going to be looking at the general trends. Then I would say don't focus on the specific numbers that anybody gives, whether that's the
Right.
National Association, the realtor is talking about the housing market, or the Mortgage Bankers Association talking about mortgage rates. Just focus on the general trend. They should come down. Nobody knows
Yep.
by how much. Home inventory and home sales should pick up to be a little bit better in 2024 than 2023. So look at the general trends. Don't focus on
Yep.
the specific numbers, because nobody's got a golden ball or
Right.
crystal ball that can predict exactly how things are going to go.
Right.
I wanted to bring this back because what this shows me is buyer demand is returning. While it showed that over 70% of buyers delayed their purchase because of mortgage rates. I think that was probably because of just how rapidly they went up and where they peaked
Right.
at. But as the year started going, as usually happens, people get used to it. They figure out a way. They might have to purchase a little bit smaller or a little bit lower priced house than what they originally thought, but they figure out a way, and especially where there's a need, there's a way. So
Yep.
that's why I think roughly half of the November buyers were going to buy regardless. I think you'll start to see that continue. Maybe even a little bit more people just say, you know what, forget the rates. I want a home. What can I qualify for? What can I buy that is within that range of what I can qualify for? And let's move on. So, which is the way things were before rates dipped down to 2.5%. Nobody really
Mhm.
focused on where the rates were. They just focused on what's the bank going to give me and what can I buy for what they're going to
Right.
give me. If we look at the percent of annual home price appreciation, this goes all the way back to 1980. You can see some years there's been more appreciation than others. You can see ramping up to the 2008 housing crisis, there was a pretty good tick of home price appreciation. Then it reset and completely crashed. If you haven't heard anything from us over the last year, actually 2 years, it's that this is a different market than what caused the housing market collapse.
Yep.
We're not giving out free money to anybody that can just claim and write on a piece of paper what their income is, regardless of
Right.
whether that's actual or not. That has changed. You do have to qualify for loans now, and mortgage lenders have pretty strict protocols they use to make sure that there's a reasonable expectation you're going to be able to pay back the loan that you're taking out.
Yep.
So those situations that happened leading up to that crisis are not in place anymore. So nobody expects anything like that. But as you can see, over the 42-year average is 4.92% home price appreciation per year. Now you can see it's very rarely ever been at that average. It basically averages out by, it's a lot of appreciation one year, a little bit of appreciation the next year. But the thing I want you to take away is, besides that craziness that we all experienced in the 2008 housing crisis, every year since 1980, home prices have appreciated. Just some years they've appreciated more than others.
Yep.
And I think that's what you'll see a return back over the next few years, which is where, if you look at the 2024 home price forecasts, this is kind of, they took the average of all eight, but this is everybody from the Mortgage Bankers Association, Fannie Mae, Freddie Mac, Goldman Sachs, NAR, and then the websites Zillow and Realtor.com. You can see the only ones that predicted home prices to come down. I don't know what they're smoking, but maybe, I mean, again, maybe they're looking at national trends. So maybe if prices crash in a place like Los Angeles or New York, that could bring the national average down. But that is not the expectation here in our local market. But you can see almost everybody else, people that bank, like you look at Goldman Sachs and Fannie Mae, Freddie Mac, MBA, they bank their living on making sure that their forecasts are a little correct. Definitely not going to see depreciation in 2024. Estimated home price performance. This is looking at December to December. You can see this year we were at almost a national number, 5.92%. I showed you here locally we were at almost 14%, December to December. And this is projecting out over the next 5 years. Again, nobody has a crystal ball, but their best guess is saying continued home price appreciation for the next 5 years, though not as much as we have seen over the last 5 years. You can see 2%, 2.7, 3.6, 4%, not the double digits that we saw over the last 5 years. For some reason, I put it in there twice. So if I translate that to our local market, so I added, if I just put in a 5% home price appreciation for 2024, which is the top orange line. So you can see, even if we just only have 5% price gains on a monthly basis, look at where that puts us starting the year and ending the year. And you can see that slope from January to December of each year is fairly consistent for every year on this graph. So if I just say, if we look at that same thing that we've done over the last 4 years, we're going to end up the year close to 320,000 for an average sales price from the 300,000 that we're at, or 280, 290 that we're at right now. Actually, sorry, we're at like 305. So that's just, and it's probably going to be higher, just because if you've noticed, this is the only year, just because I couldn't make the math work for some reason. But if we start out the year at 305, that graph's going to be even higher, because we ended the year at 305 is what I'm trying to say. I was having trouble. Let's just say I was having trouble with this graph because it wouldn't resize it for me when I kept putting the numbers in. So instead of having that entire 2024 off the graph, which would have been an interesting topic, instead of, if home prices just continue at a moderate pace, it's going to be off the chart.
You probably have to take out your 2020 numbers and do 2021.
I did. It used to let me resize the scaling of the graph, but I don't know if Google made a change or what, but that option was no longer there. But anyways, I digress. And what I'm trying to say is, if we just see moderate price appreciation this year compared to the previous years, we're still going to, the pricing in this market is going to continue to move up.
Yep.
So final thoughts. See what you think about these, Josh. I was trying to kind of put our thoughts and slides together, and I think mortgage rates may be a little less volatile this year than they have been in previous years. Only caveat there, as we talked about before we got on this video, was it is an election year. So that can make it more volatile, but we'll have the year. And as Josh told you, mortgage rates should end the year lower than they started. How much lower, we don't know.
Right.
Home prices in our local market will continue to climb due to the lack of adequate inventory. Number of homes sold may have returned to normal monthly levels. But the one caveat I wanted to put in there is, if there does happen to be a quick drop in mortgage rates sometime throughout this year, that could bring a bit of a buyer frenzy back to the market, because
Yeah.
there's still a lot of people, even though people are coming back onto the market, there's still many that are sitting on the sidelines waiting for rates to come down more. There are still some people that are sitting there waiting, saying, well, I'm just waiting for this whole house thing to crash so I can buy a
Hmm.
house cheap. And it's like, well, you might be waiting for the rest.
Yeah.
You might be waiting for a few decades. But that's what I see. Because, I mean, if we saw rates went from like 7 to 8% in almost like 24, 48 hours in the fall, didn't they?
Say
It
that
felt
again.
like it was really quick. I said the mortgage rates kind of went from 7% to up to 8%, almost in like, I felt like it was in like 24 hours or 48 hours.
Yeah, it
It
was
was a
quick,
pretty
but it came
quick.
back down quick. It only lasted like a
It
week or
did.
so.
Yeah. If we saw something similar, like rates go from where they are now, like 6.69 to 5.69 in even just
Hmm.
a week, I think you'll see a bunch of people trying to capture that rate really
Oh
quickly
yeah,
before
yeah,
it resets back up. So
yeah,
that's what I mean. We might have little pockets of buyer frenzies that happen this year if the mortgage rates do get a little bit more volatile.
yeah,
Because guess what? We're still short on homes.
yeah.
Well, any other final thoughts there from you, Josh?
Nope. I think it should be a good year getting back on track. As long as nothing crazy happens, which we're not in control of. So, but we'll be here to answer all your real estate and mortgage questions and needs.
Yes, yes. And as always, when I post these videos, I throw a link to Josh's social media and pages
Thanks,
and
sir.
mine as well, so that anytime that you hear us say, hey, if you have questions, just reach out to us. You have the link where you can. So please don't hesitate. Either one of us are glad to talk to you, whether you are choosing to do business, ready to do business with us or not. If you just have some random questions that you need answered about um, what you might need to do to get a mortgage a couple years from now, or what you might need to do to think about preparing to buy a house or sell a house, not in the near future, but way
Hmm.
down the road. We'd be glad to talk. It's we're not hard salesmen. We're not here to try to
Yeah,
get you to sign something every time we talk to you. So
just
we
here to
just
help.
like to yep, we like to educate, we like to help, and we'll answer any questions that we can for you. All right. Before I close it out, I'll go ahead and kind of let Josh do a little closing as well.
We appreciate you guys. If you ever need anything, please don't hesitate to reach out. We hope that you're staying warm today and have an opportunity to go play in the snow. Hopefully, it continues to dump out a bunch of snow so we can all play and enjoy Mother Nature a little bit out there. So, but if you do have any questions or need anything, just feel free to give us a shout. I am now at Movement Mortgage, so I have a lot more products to offer than what I did before, but a good company, faith based, good culture, and as I said before, always here to help. So,
Yeah, absolutely. And again, that's Josh Pruitt with Movement Mortgage. I'm Jay Cottrell with eXp Realty, but there might be some news there coming as well. And that's pretty much rounds out this month. Be with us again. Josh and I collaborate on these on a quarterly basis. I
mhm.
do put out a monthly video on the real estate market and also a weekly video just on as a short, like 3 to 5 minute. Here's what happened over the last week in our market. So that is it for this week. This month. We will see you next time. Thanks for watching the video. Hope you enjoyed it. Please share it and like it if you did.
Thanks, guys.